Debesen Red here, and welcome to another episode of our weekly commentary. In this video, we are going over the previous week price action and see how price played out based on our weekly outlook, and also introducing you to a simple but highly effective entry model that you can use on your day trade. So if you're excited as I am, join me. Let's head over to the chart. Welcome back, guys. So last week, during our weekly outlook video, in our previous video, we talked about how we want to see price trade down to this external range liquidity, which is this SL liquidity below this place, below this low, and also we put in mind that for the fact that we have traded down into this first external range liquidity that builds up this overall low resistance liquidity run, that we might wait for price to give us a confirmation that it wants to continue lower to this low, or that it wants to reverse and go back to internal range first before dropping to the opposing external range liquidity. And also we say that we want to see Monday's trading. If we open on Monday and trade below and close below this social liquidity, that we are definitely trading below this low. But if Monday fails to give us that as a confirmation, that we have to wait and get more confirmation that price wants to reverse and go back to external range liquidity before we can now know whether we continue to trade down. So if you are here to watch that video, you can head over to the description of this video. I will link the video there. If you click on it, it will take you directly to the video. Make sure you watch and learn something from it. So with that being said, let's head over to the daily time frame to see how the week transpired. So the daily time frame. So this is Monday's trading, and unfortunately Monday did not trade below the external range liquidity and it did not close below it. It traded below but did not close below it. That was our first confirmation, trade low aggressively towards the external range liquidity that we outlined on the weekly time frame. So we now have to wait. After Monday did this, we now have to wait for more confirmation that price really want to trade down or up. So we are just on the sideline waiting. Then we also talked about this daily order block. Okay, we want to see price trade up to it. In case we failed to go from here, we want to see price trade up to it and give us a support. Okay, give us a support, a confirmation from the lower time frame. Anytime we hit a key level, we always have to wait for confirmation from the lower time frame to know if price really wants to react from there and continue trading to the opposite side, or maybe it wants to fail or go to the other side. So anytime we hit a key level, we have to wait for confirmation. So this bullish order block is a key level, and also we talked about the level and how we want to see price give us a confirmation that it wants to act as price resistance, okay, to push price lower and see us into that level. And also we talked about this fair value gap here, so that if in case everything here fails, that price is definitely going to take us back to internal range liquidity before we continue down to external range or something like that. So we talked about this level, this order block, and this external range liquidity. So these are our levels that we are eyeballing for the week. And let's now head over to the lower time frame to see how price gave us the confirmation that price drove for us, that intends either we are going to be bullish from here or bearish from this other block, or we're going to trade towards this internal range liquidity drop. Okay, so that's just it. So on Monday we see price trade back up, okay, into this level, but fail to get to this 4-hour CB, side imbalance. Okay, we fail to get to that CB, but price trade and closed for Monday. Then Tuesday opened, trade down. Unfortunately, we are yet to see a confirmation that price want to go lower. So if we are going to take that confirmation, we have to see price trade back into this level and into that daily, because these are our levels from the higher time frame. Okay, so we don't joke with this level. We have to see price trade to this level first before we start doing anything. If price did not trade into that level, we are going to stay and wait for price to trade into those levels before we now look for our confirmation to trade lower. So had it been that price traded up into this level, okay, on this 4-hour time frame, into this suicide imbalance that we identified on this 4-hour time frame, I'm going to go down to 15 minutes to look for confirmation for me to take price down to run this previous day low, which is this Monday's low, and price does it, but fortunately it did not give us any confirmation. So price traded down into this previous day low. Price traded down into this previous day low, which is Monday's low. Unfortunately, it did not give us any confirmation. It did not trade into our key level, then give us a confirmation for the short. So that is it on Tuesday. Tuesday did not give us anything. So we are still waiting to know if we break and close below this low. Okay, that we are going to have a retracement and continuation. But unfortunately, price just, this is what we call turtle soup. Okay, turtle soup. Just when we wick below an old low and close back inside the range, it is called a turtle soup. So this here becomes a turtle soup once we close, and the next candle close forming a swing low. So here becomes a turtle soup, and price reverse from here and move up. So as price enter this key level, so we say that we want to see price trade into this place and give us a confirmation. So this fair value gap overlapping with this daily order block level. So we want to see price trade back to it, give us a confirmation that we want to either continue lower or reverse. Okay, so what happened after price have traded below this low and move up and break this high? This confirms a break of structure. This is a valid break of structure for me. This is a valid break of structure for me, or market structure shift. Okay, this is a valid market structure shift for me, considering the fact that we have traded lower, we run sell side, then we break to the buy side above here, and also inside this fair value gap. So now we have a breaker pattern. We have this low, we have this high, we have this lower low, then we break up. Then we can now identify a PDRA that we want to see price react from. We have this as our breaker. I love that one because you have more body, and the other bodies are just inside of that whole range. Okay, so that's the highest bodied candle there, candle that have the highest body. Okay, so I love the body there. That is just it. So price trade down, tap into it, then reverse. Okay, move to the opposite direction. So here, this now PDR, this newly formed PDRA confirms the bullish trend. Okay, confirms the bullish trend. So after market break structure, we are now no longer looking for short, we are now looking for reason to buy. And the first reason to buy that we found is this breaker, because this is the breaker pattern: low, a high, a lower low, and breaks the high. It breaks the high and make a higher high. Then when price return back to the breaker, we look for buys above here. So here confirms our trade opportunity for the week. Here lies our trade opportunity for the week for one short, one kill. ICT favorite trading ICT favorite trading model when he was still trading forex. One shot, one kill. He targets 75 pips for the week, and that is just it. So when this happens, so this is now giving us a clear indication that the next day, which is Wednesday, is going to be bullish. So now we have arrived to one direction, okay, one directional movement, which is Wednesday being bullish for the week. And so we have to wait for open, low, then we trade the expansion to the upside. Okay, you have to trade the power of 3, the open, low, high, and close. So on Wednesday, right? On Thursday, okay. On Thursday, we'll be expecting something like an open, okay. First we open, trade lower, okay, make the low of the day, and at the same time hitting a key level, okay. This is one model that is very powerful, the power of 3. And open, a low, then expansion. We want to see price when it's making this low from the opening price. We want to see price trade into a key level, okay. From there, you can now expect the price to expand to the upside, okay. So this expansion is what we are going to capitalize on, entering from key level that price traded into, okay. So this first movement after 12 o'clock, after the opening price, which is 12 a.m. New York time, okay. After the opening price trade lower. So this first lower movement is known as Judas swing movement. This first drop is known as Judas swing movement, and this is basically to offset people that think that price is actually dropping. So it's just a Judas swing movement that will take us into a key level before price will now continue to be bullish and fulfill its daily expansion target. Then we come off and we close for the day. So this is basically the open, low, high, and what? Close. This is just the schematic. So once price have shown us a reason to be bullish, we can now identify this to continue our trend up to this level, okay, up to this level. So there's no setup on Wednesday. Then on Thursday, we now look closer. That is when we will now find this breaker. And press trade up, then return back to that breaker. Here should be our setup, okay. Let's check if actually this day gave us a setup. So head over to 1 hour and 15 minutes. That's basically where I look for this setup on the 1 hour and 15 minutes. Okay, so I'm trading a Judas swing setup, a Judas swing model. I'm looking at it on the 1 hour and or 15 minutes, depending on how the price decided to give, depending on where we have our PDRE. Because first of all, we have to identify our PDRE from high time frame first. We have to identify that PDRE. Okay, then you expect price to trade down to it after the opening price before we can now move up. So that is just it. So on Thursday, price drop. Okay, this is the opening price on Thursday. So this is the opening price on Thursday. Price open, then drop lower. Okay, drop lower before the expansion. Are you seeing it? This is a complete perfect power of 3. Okay, this is a complete power of 3. Complete power of 3. So taking the 15 minutes time frame, you have to get it clean and a clear reason. So in the 15 minutes time frame, which level do we have below the opening price? We have this old low. Below the opening price, we have that old low. And if you look well, if you look to the left, we have a fair value gap and an order block. Okay, we have a fair value gap. And also an order block inside of that breaker. Okay, inside of that breaker. So all these one down, all these consecutive down close is just one order block. Okay, so we have it on that level. We have that order block, okay, and also that fair value gap. So what we expect this day is a Judas swing, an open, a low, then the expansion we enter. So what we do that day is, after we have seen the opening price, we want to see price trade below the opening price into a key level. And which key level do we have? The first one is this old low, and the second one is the order block. So, but me personally, I like to take the first one. Okay, I would like to take the first one so that I can, be tagged them, because sometimes price we just touch the first one a little bit and move. Okay, so just have to take it from the old low, and this is basically a turtle soup entry, and our stop loss is going to be exactly below the very swing low that formed the order block. Okay, this low. So that's the setup there. So price trades trigger us, and we target this level first, target that level first, and take our first profit, scale out, then we hold to know if we capitalize on the weekly range expansion. Okay, to take us to that high, that equal high that we have on the 4-hour time frame. Okay, take us above this high, and then maybe into this level. Okay, so that is it on DXY. So we are trading DXY actually, but we are just using it as a framework. And if you go down to Euro USD, you see how this Thursday and Friday give us a nice trade. So let's head over to, let's just watch Thursday. Let's just watch Friday and also see what we can get from Friday, if he gave us the model or not. So on Friday, this is the opening price. This level is the opening price. This is the opening price level. Okay, this dotted line is the opening price. Okay. So remember, we're still looking for this. We're still looking for this open, low, high, and close. Okay, we don't want to even know where it is closing. We just want to write the expansion. Okay. So Friday, we have this, the opening price. We want to see a Judas swing. Which key level do we have? Which key levels do we have? Okay, here we have a low resistance liquidity run. Okay, so liquidity is being stacked up below these lows. So we mark it out first. This is a low resistance liquidity run. So there's liquidity below that level. And if you want to continue bearish, bullish, you want to see price run below that low, accumulate the buys and give us something nice. So below that old low, what do we have? We have this order block. We have this order block. Okay, we have this order block. We have that order block. This is two consecutive down close. That is a bigger, larger order block. Okay, OB. You can baptize this out though. This is actually super nice. This Judas swing model is actually super nice. I like to use the 1 hour and 15 minutes. If the 1 hour is not that clean, I can check the 15 minutes. Okay, but I have to use 1 hour first to get my levels, clean levels. Okay, before anything. So and here we have it. So here we can still refine this order block. Okay, because below this low we have two PDRs below this low. We have two PDRs. Number one is this inversion fair value gap. We have this inversion level, this inversion fair value gap. Okay, we have that inversion fair value gap level there, and also we have this other block. We have this other block. Because this is the last down close. This is the last down close before this expansion to the upside. So we have this other block. We have that as our OB. So it's left for you to know the one you want to be buying from or selling from. Okay, we have that other block. We also have the inversion fair value gap. So these are the levels that we are seeing below the opening price, and we expect a Judas swing. Okay, expect a Judas swing. This is a London section model. This is a London section model. Don't worry, I will still make a complete video on this Judas swing model. I will make a complete video on how to trade the Judas swing model. Okay, so but now let's just study what price did. So we open here Price gave us a little consolidation, then drive lower into the key level. Bam, take out liquidity. Okay, people that have traded their stop loss, the long people that went long yesterday and have already traded their stop loss to this low, after they see price move up, price come back down, take everybody out. Okay, we accumulate more buy order inside of this fair value gap, inside of this inversion fair value gap, and also an order block. Then we got the expansion, accumulate a little bit. During New York session, we had a small retracement, then the expansion and hit the target. Okay, so this is basically the trade. This is basically the trade. So I like to take the first one below the low. Okay, and my stop loss below the low, the swing low that formed the order block, and the swing low is around this level. The swing low is this swing low, this order block swing low here. That's what my stop loss will be to protect my trade. We ride it first, scale out, because I normally like to scale out first. Okay, first scale out will be at this swing high. Okay, at that swing high, that will be the first scale out. That will be the first scale out. Or you can now hold it to this level and fulfill our weekly target. Whatever happens after we hit the weekly target, we are done. Whatever happens after we hit the weekly target on Friday, we are done for the week, and we stay in the sideline and wait till next week for price to give us another opportunity. So this model happens every week. This model happens every week. You just have to backtest it. The open, you have to open 12 a.m. New York time. We open, we trade lower, hit a key level, then we expand to the upside and close off for the day. That is basically everything. That is basically everything. So let's head over to Euro USD, which is the market that we trade, and see what happens there. The Euro USD chart. I'll be real quick with this one because the video is getting too long. I'll be real quick. So we are going to start on Thursday, because that was when price gave us the confirmation on DXY that the dollar is going to be bullish and that other foreign currency will be bearish. Okay, so we got the confirmation on a Thursday. So which is this day? Which is this candle? Okay, is this bearish candle. So we want to go over to the lower time frame to see if our model, remember our model, we have the open. Remember the model that we are looking at. We expect the open. Okay, sorry. Expect the open, the opening price. Okay, the high, make the high of the day. Okay, then the low, which is the expansion low. Okay, and retracement, which closes off for the day. So this is our model, and just looking at this candle, we have everything here. We have the open, the high, the low, and come off it and close off. So let's go to the lower time frame and know if we actually had that in price. So 1 hour is my first time frame. Whenever I'm looking for the Judah single model, the 1 hour is my first time frame. Okay, and if 1 hour is not clean, I can now head over to 15 minutes. So the opening price, remember our opening price is 12 a.m. Okay, 12 a.m. Eastern Standard Time, EST. That's New York time. Okay, so here this is the opening price here on Thursday. That was when price becomes more cleaner for us. Remember, we as day traders, we don't trade always. Okay, every day is not trading day. Day trading is not everyday trading, as I always say. Day trading is not every day. I know some people will be like, oh, I have to wait from Monday, Tuesday, and Wednesday, and I'll not take any trade, and I'll be like, I'll be waiting till Thursday. And that is what makes you a trader patient. You have to be patient to wait for that setup to form. You have to be patient to wait for that setup to form, to give us a clean slate for us to take price. So this is the opening price here on the 1 hour time frame. Okay, we want to be bearish, okay, because DXY is bullish. Okay, so remember we have this confirmation here. You have this confirmation here that we want to be bearish. Okay, after price run the liquidity above this equal high, let's just make it quick. First trade the liquidity above this equal high, and boom, break structure. Okay, so after this break of structure, we now have a confirmation that price is what? Bearish. So Wednesday did not actually give us a nice open, high, low, and close. So after the opening price just traded lower, okay, give us the confirmation, then trade lower, close up for the day. So on Thursday, price was more cleaner because we have the open, and above the opening price, what do we have? We have this old high, okay? That's where we start. We have this old high, okay? We have that old high. And beyond that old high, what else do we have? We have fair value gap. Sometimes we don't usually have old high. Sometimes we can just have only fair value gap, okay? I've seen so many situations, so many scenarios like that where we have only fair value gap. Then price give us a Judas swing into that fair value gap and continue. Or sometimes we have an order block and a fair value gap. So we just have to be careful and watch the kind of PDRs that we have there. So let's head over to 15 minutes to further refine it and see if you have enough reason to take a shot from there. So here is a 15 minutes time frame, okay? Here's the 15 minutes time frame. This is that CB, okay? That fair value gap, that CB right there, okay? And beyond that CB, we have our other blocks, okay? We have our other blocks. We have our other blocks, okay? We have our other blocks. These two consecutive up close is our other block, okay? You have our other block right there, okay? You have our other block. So what do you expect price to do? After the opening price, we want to see price trade up into the key level, and also within our Q zone time, okay, within Q zone. So this is our Q zone for London is 2 a.m. because I always say that this is a London trade, okay? London protraction, okay? So I want to see price trade back into that key level, then we need to short from it. Place our order, okay, above that swing high because it's overlapping with this fair value gap. And where is our stop loss going to be? Above this other block high. Some people will be like, oh, it's very massive. It's not massive, okay? It's not massive, okay? So that's the trade right there. And that's our Judas swing trade right there. So during 2 o'clock, wait for 2 o'clock, price traded back there, boom, okay? Then we got a drop. It's going to be this low. So our first target is going to be this low, okay? It's going to be that low, and subsequently we now hold to know if we can get to this, or we can close off everything here with Vanda setup, or we can hold to know if we can get to this fair value gap, okay? Please take it right there and trade it out perfectly. This is a 1:8, okay? This is a 1:8. If you're risking 1% per trade, this is enough to pass a problem challenge, okay? But I don't advise risking 1%. If you are looking to pass a profit challenge, I don't advise risking 1%. But this model is a very super model. Once you can be able to identify a clean one-sided directional movement for the week, you can get this like 2 to 3 times in a week, okay? It's not happening. It's not like so the price doesn't give us this thing more than 3 times a week. In my own price study, I've studied this model very much that I identified this thing to be repeatable for a maximum of 3 times in a week, okay? So those 5 trading days that we have in a week, this model usually happens 2 to 3 times a week. So if you can be able to identify it, it's going to give you a very nice trading. So that is it. So price entered there, okay? Price entered, drop, gave a little OTE after breaking of structure. Price retrace inside the fair value gap. You can do that yourself. Then boom, the news release. I think this is CPI, Euro CPI or something like that. That brought about this kind of massive down bearish candle. Okay, so price traded lower and boom, that is it. Hit our target. So after price hit our target, we have to wait for confirmation or either to go bullish or bearish. So that is the trade for the day. The Judas swing model played out nicely here. Then on Friday, what do you have on Friday? on Friday, what do we have on Friday? Okay, on Friday we expect same thing, but in this time we have to be more careful considering the fact that we have traded into a daily order block. So you want to see a confirmation that price want to go lower or continue higher. So for us to go for us to shift bullish, we have to see price take out this high. Okay, if price will take out this high, then that will give us an indication that we are going to switch bullish. Because here, before this day open, let's say before this day open, that we are just seeing this price action inside this place. We are not yet inside for a day. We're just seeing this price action. Okay, so we're just watching price. We are doing our analysis for Friday. We see price made this low, made a short-term high. Okay, a lower high. Then we made a lower low. Okay, we made a lower low right there. Then we trace, fail to make a new, fail to take out this high. Then price has been consolidating within this level. The price close off. So the next day we still expect our Julian swing model. We are still going to expect our Julian swing model, but eventually if price should trade above this high, then that cancels everything for us. Be in the sideline and wait. Okay, if price should trade above here, that cancels everything for us. We have to be in sideline and wait for confirmation to turn bullish. Okay, so but price did not do that. Price just came back up, take out this high. Okay, because this is our low resistance liquidity signature. So this is our low resistance liquidity signature. So right here, we have it right here. So after the opening price, this is the opening price here. We had that low resistance liquidity signature, and above it, what else do you have above it? Boom, with a value gap. Okay, do you see how this model is just becoming nicer? You see how nice and consistent this model is. Have that liquidity level there. Then we have another fair value gap right there. Okay, have that fair value gap right there in form of CB. Okay, I was saying that these two setup looks identical. Now these two setup looks identical. This Friday setup and Thursday setup, they are fucking identical. Have you seen it? They are fucking identical. So that'll be the setup. So I can still refine, or if I want, now I have a visible swing high here. I can place my entry here. Okay, I can place my entry here. I can place my short entry at that fair value gap. Okay, I like to take PD. I use that above the liquidity. Okay, then my stop loss will now be above this swing high. Then I'll target here, this low. Okay, because we are now inside the daily so target that low, and I'll be very much aggressive with my target. Okay, because you guys can do anything inside this scheme. So, or if you want to refine this your entry, you can go down to 15 minutes to refine the entry. Okay, to get more precise. Okay, even if you don't want to, like if you see this as a larger stop loss, you can just reduce it a little bit to this high, okay, to this swing high. But personally, I would like to keep my own above this high, okay, because sometimes price can just decide to come and take this high, or you trade somewhere above here and spread will take you out of that high. So I like to keep my keep my trade room to breathe. Then price trade lower. Okay, price trade lower. So we still have the open, make the high of the day. Sorry. Price open here. Yeah, make the high of the day. Trade lower. Another retracement. Then boom. That is it. So that's basically the trade for the last week. Okay, that's the trade for last week. And I hope you enjoyed this video. If you like this video, please try as much as possible to support us by just subscribing, like the video, and share the video to your friends and enemies. If you have any question, you can drop them on the comment section. I will be open to answer all your questions. Okay, so in the meantime, enjoy your weekend. And if you're yet to watch the other video, kindly check the description of this particular video. You see the link there, so you can now head over to the video and watch and get the insights on what we are expecting prior to the week open. And also this new week I'm going to drop another video on my weekly outlook, okay, what we expect to see in the coming week and how we expect the price to deliver. Okay, so see you guys. Enjoy your weekend and stay safe.